Hello and welcome. In this episode of FHS Egypt podcast, we are joined by Amr El Nadi, Head of Hotels and Hospitality, MIA, and Managing Director of the Global Hotel Desk at JLL, with more than 18 years of experience across hotel advisory, transactions, and investment strategy. Amr leads JLL's hotel business across the Middle East and Africa. And having joined FHS conversations across several markets, he brings a valuable perspective on why Egypt matters now, how investor priorities are evolving, and what could unlock the country's next phase of hospitality growth. Super excited about this discussion. Welcome.
Same here, Daria. Thank you, and I really appreciate this introduction. Thank you.
Wonderful. Well, you are no stranger to FHS. As I've introduced, you've been to a number of FHS events across several markets, and you have seen how different destinations position themselves to investors. Why should the hospitality industry be talking about Egypt right now?
Um, Look, I mean, firstly, I would just want to congratulate, obviously, the bench team and everybody working on the FHS, obviously, event of able to secure and carry out this event in Cairo. For professional accomplishment as well, and personally, it's something that I hold quite dear to my heart, being Egyptian myself. So really great to bring that sort of traction, attention, and really kind of put a solid focus and emphasis of the Egyptian market, towards your and our effectively global stakeholders. Egypt, look, I mean, it's been extremely dynamic and vibrant over the last couple of years. We're seeing, really solid investment activity across the country that's happening in a very systemic, structured, professional way. And not just within hotels, but very much across all the different stakeholders, pieces of the supply chain, on a tourism side and hotel investment side. And it's really becoming at the moment, a bit of a playground to everybody involved in the industry, one way or another. And that's obviously attracting a variety of pool of capital towards the market, and it's something that we pay attention quite closely to. We've been doing work in Egypt since 2007. One of my first assignments at JLL almost 20 years ago was an existing iconic hotel in downtown Cairo at the moment. And alhamdulillah, the story's been just growth on growth on growth since then. And we're hoping to continue that pattern.
Yeah. Now, most of the conversations I'm having as well, Egypt always comes up. So I'm sure that will continue. And well, you said you've been in the market, looked after that market for quite a few years. How would you say the profile of investors specifically, considering Egypt's hospitality sector evolved over the past few years, and what do you think is actually driving that change or shift?
Uh, Look, ironically enough, we haven't seen a significant change in the type of investors, but we have seen a big surge of regional developers and capital coming in over the last 24 months, in addition to what some of the previous Gulf investors used to do over the last decades. It's still, we're still seeing a lot of activity from local domestic family offices, private developers, even the large master planners and developers effectively just doubling down and increasing their portfolios across the country, diversifying a little bit, some of their revenue stream away and decentralizing from the typical, Cairo area and some of the other micro locations within the Red Sea, to very much across all facets of the country. It's still a market that is driven by a development ambition. There are expectations from top to bottom, government institutions, lenders, ministries, to all the holders of the capital to add a significant amount of hotel keys relative, of course, to the existing supply. And that is basically just the larger pie of the allocation of investment funds that we're currently seeing. There are often or sometimes the outlier European or American or Asian investor that will come and partner with an existing developer or will target a certain asset here or there. That has not stopped, and we're seeing more and more FDI trying to assess what are the different barriers of entry to the country and who are the right partners on the ground to be working with, just to basically just understand how the governance work, how the compliance systems work, what does it mean to actually own commercial real estate or operating businesses in the country, and all of that. And are usually that partnership model is usually what works best at the beginning of the cycle. And we've seen this trend happen across even the wider region. It's not just Egypt. We will see it in Africa. We'll see it in GCC countries until there's a certain level of investment maturity that those markets reach. For then people to say, what, maybe it's time I can do this by myself. So until that time comes, I think it's definitely heading in the right direction. And like I said earlier, we're just hoping for this trend to keep continuing.
Yeah, absolutely. And where do you currently see sort of the greatest concentration of investment interest, and which parts of Egypt's hospitality market remain underdeveloped at the moment?
Um, Look, I mean, if you look at a country as a whole, we have what, maybe an odd 180 plus thousand keys registered, hotel keys. Dubai alone has that supply. Dubai alone has that capacity. So I would say there's definitely room for growth across the different facets of the country, especially that it offers a phenomenal variety and diversity of product that can cater to all segments, all positionings, and completely different types of tourism. From in one part of the country, you can be enjoying sun, sea, sand type tourism in less than an hour by plane. You're overwhelmed by 5,000 year history, basically monuments, and you're just ejected in a completely different facet of a travel habit, right? There's definitely a product for everyone from the economy side all the way up to your luxury and ultra luxury. From a supply development standpoint, if you look at a percentage of where most of the activity is currently happening, it still remains, in my opinion, Cairo, mostly concentrated east and west. It's not just limited to single projects here and there. A lot of it is part of wider master plans, either new capital and whatnot. So there is a strategic thinking behind some of that supply that's actually coming in. We've also seen a lot of activity around the Red Sea happening, and North Coast is definitely catching, obviously, everybody's attention at the moment with Abu Dhabi's project in Ras Al Hikma. The Qataris just made an announcement, of starting, and deploying capital in their own master plan, and Marsa Al Maroom, not too far from where Ras Al Hikma is going to be. Private developers are adding, some hospitality products in addition to their residential compounds and their mixed uses, etc. So it's very much all over the place. Um, and I think it's important to know that growth over the last few years has always been fairly organic. In Cairo, we haven't seen the double digit supply coming in one go and disrupting the market and whatnot. So it's been fairly organic, single digit growth over the past few years, and that not only obviously creates jobs and achieves what the government effectively wants to do, but what it does is that it also kind of mitigates a little bit some of that oversupply risk that many investors may be fearful of, as well. So it has been a creative. I mean, from the countless conversations that we have with owners on the ground, developers on the ground, a lot of them are quite satisfied and happy with the sort of returns that they're achieving. And let's not forget, this is still the most important factor that drives any investor to deploy capital in any place. It's return, 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 no matter what, and obviously based on their own needs and profile as well.
Yeah. And talking, I guess, about the growth and what is driving it, what do you sort of expect to be influenced by that? Is it the new development, acquisitions, or is it repositioning of existing assets?
Um, Look, I mean, all three points that you just mentioned are happening right now as we speak. But there is a specific target from the government to add approximately 40,000 keys to the market over the next few years. I saw the 50 billion Egyptian pound package that the government has effectively allocated to boost hotel development and obviously all related activities. I mean, look, we've seen what Tourism Development Fund, for example, the great success it had in Saudi Arabia, and what that does. Obviously, in Egypt, we do expect, inshallah, the same level of attraction, the same level of incentivization for people to and investors to capitalize on it. But at the same time, um, Egypt is full of lending institutions, and they need also to follow suit on this. The problem is, one of the challenges we've seen in the past is from an underwriting perspective, the Egyptian pound versus the US dollar, currency fluctuations, the past subsequent, currency devaluations that have occurred whilst it did provide some form of competitiveness for the local currency and for investors to to arbitrage, to do a proper arbitrage. It can be a bit of a challenge and scary for some international investors who underwrite on a long term basis, because investors ultimately, first and foremost, they want stability more than anything, geopolitical, economical, and on the geopolitical front, looking at what's been going on in the region over the last few years, um, 2025 was still a record year for Egypt from a tourism, travel and inbound traveler standpoint. So if you're already seeing that from a downside risk, you're achieving record figures, um, anybody can start thinking and daydream about what is a real recovery gonna look like, right? And that this is where it becomes quite attractive for many capital holders.
Absolutely. And we were talking about the obviously what investors are looking at, profitability overall. What you would sort of suggest, sort of looking, beyond the traditional indicators like occupancy and average daily rates, in terms of what will guarantee that sort of or give an idea of the long-term value and resilience of a hotel.
Okay. Look, I mean, this question doesn't just apply to Egypt. Obviously, I mean, it's really a bit of a universal loaded question, Daria. But for long term ownership and resilience, besides occupancy and ADR, I mean, you got to look at every single headline if you're effectively your P&L. You You got to make sure your asset is competitive within the market, within its own micro location, reaching, its fair share from a demand and from a ref bar standpoint. You're able to achieve the right operating margins, that the market is currently dictating. And funny enough, Egypt has phenomenal operating and NOI margins compared to many of its neighboring countries, partly due to the way the business is structured, in the sense that you have U.S. dollar or euro-based denominated income versus a local, effectively cost base. Your labor is local, your employees, cost of goods, things like that. You may have an expat, director here and there. You got to pay your management fees in U.S. dollars, but the rest of the business is on Egyptian pounds. So that, over the past few years, devaluation or no devaluation, we've seen record operating margins across the board, and that is something that's very, very attractive for not only existing owners but any incoming hotel developer and investor. So also depending on the profile of the investor and how they look at when they underwrite hotel investments. Some of them might be focused on the business, the margins. Some of them can be a little bit more risk averse, and decide to effectively just lease their properties to professional tenants, professional brands, operators here and there, and just will abide by a fixed, rental income stream. So it also boils down to the investment requirements and the thresholds that the capital is seeking.
Yeah. Um, I mean, when we talk about also specifically investment, international investment, the whole currency situation that you've mentioned, there's sort of a lot of uncertainty as well for international investor. What would you say local hotel owners and developers also need to improve when it comes to things like, I don't know, reporting or what governance, or is it asset management, sort of to attract that international capital?
Right. Look, I mean, there are macro factors that are beyond any um, hotel owner's control. That they can obviously they can lobby, they can have the relevant, the right conversations with the relevant authorities. I mean, there are multiple chambers that oversee these sort of conversations. But um, international capital, from my own experience, and we see this at the global desk every day, because the only thing we do is in that platform is just focus on cross-border capital. Um, Performance is one element, but it's not the most important element. The most important element is always the certainty for the investors to be able to get their money back when they decide to exit. And at the moment, if I have a repatriation of foreign currency issue, that can cause, cause a bit of a problem. Now, if you look at where international non-Egyptian capital has done over the past few years, and there's been a lot of that, it's mostly been Gulf investors, either doing it on a bilateral government to government strategic level, doing it on an individual effort basis, doing it on a development basis, repositioning basis, partnerships, but they're in it for the long run. Many of them are long-term holders. They don't want to exit in 4 or 5 years. It's not your private equity institutional capital type investors that is doing that at the moment. It's mostly developers who also have an affinity to the country, cultural proximity, distance, you name it, and basically they carry out these investments in the form that they're going to own it for at least 10 years, and there are no plans to exit. Now, if we start having these conversations with some of the global private equities who are bound by lifeline of funds, who are bound by a much shorter duration of hold, it becomes a tad more complicated. But we've seen in the past, but no, I mean, nonetheless, I mean, we've seen it happening. I mean, we've seen an American fund coming and partnering with the government in Mugama Tahrir, Cairo House, which is going to be the future autograph collection. So, like I said, there's always that outlier international investors who takes effectively a long term view, and with the right partnership model, these no longer become challenges in the conversations in the shareholder agreements and sort of JV structures that they effectively carry out.
Yeah. You previously mentioned also that in terms of investors and current interest, is quite limited. It's sort of traditional family offices or some of the local investors or Middle Eastern investors. What do you think needs then to change for Egypt to develop a more active and liquid hotel transactions market with a broader pool of buyers and sellers?
So, to my previous point, what ultimately will drive liquidity, and by liquidity, the term liquidity for us is usually characterized by the transaction volume that we track in our respective markets, is the ability to track down what is the valuations of assets changing hands, basically. I think one of the challenge we always have in many countries, or many micro markets facing that sort of investment activity at first, is the ability to nail down what is always that exact number. Um, we were able for example, in the UAE, to pinpoint over the last few years what was the transaction volume. It's not just an individual GLM effort or the hotel owner effort. It takes a lot of work, and it takes really a lot of collaboration with the respective bodies, the ministries of housing, investment, with the right authorities to effectively know what that number is. And as that number becomes more transparent to the public market, this is when we start seeing more certainty from international investors coming in and becoming more comfortable in saying that if I do an acquisition tomorrow, I know that if I want to exit in 2, 3, 4, 5 years down the line, I can get my money back. So it's not just always performance driven. So if you're a long term holder, you're happy with your annual returns. It's reaching the threshold that you've been set out to do. Uh, but who's going to be your next buyer? Who's the party, or what is the type of investor who will want to come and acquire your hotel? There are transactions happening. There has been some transactions happening. We've seen what Icon, the hospitality arm of Talat Mustafa has done with the government portfolio. We've seen what the Shepherd Hotel repositioning with Saudi investors. I mentioned the American investor looking into the Mugamma Tahrir, which is going to be the future autograph collection. I mean, there are transactions happening. Let's make no mistake about this. But it's just, how do you gather all of that data in a way that you start demonstrating a story that there is liquidity, and that ultimately, as it increases over time, it does provide the certainty to incoming investors that not only your performance is good, your annual performance of your hotel, and it works and it's feasible, but actually you and your shareholders can get their money back after a certain point in time. And that is, in my opinion, absolutely critical. Without that, you're still going to see more the profile of long-term holders, individual effort to carry out their own exit plans, instead of it becoming more and more institutional capital. And some other places that are outside Egypt, for example, that are less liquid from a transactional standpoint, we started to see the emergence of REITs, either public REITs or private REITs, in order to attract retail investors. You don't need to have a significant amount of capital in order to participate in those REITs, but this is where governance really kicks in. You have the operating body, the ownership body, financial body, and who's going to be asset managing all those portfolios, and how do you face public market fluctuations? Because we've seen that. We've seen that becoming really challenging to many of the REITs globally, especially during COVID, because it's not just the performance of your hotels that drives the valuation of those REITs, but it's really the sentiment of the public markets as well.
Yeah. Well, you work with Middle Eastern investors pursuing international opportunities through JLL's
One or
global
two.
hotel desk.
Yeah, one or two.
What Yeah. What lessons do you think from those more mature hotel investment markets could potentially strengthen Egypt's proposition?
Um, so if you look at the last 10 years and you see how the cycle of outbound capital has happened from investors coming out of the Middle East, it's been all over the shop. Geography wise, the type of hotels that they've acquired, single asset portfolio, mid scale portfolios, all the way up to your ultra luxury trophy hotels in mature markets. Um, I think the common pattern in all of this is one, the transparency and freehold ownership laws, the abundance of third party debt and liquidity in the debt sector to even assist international investors to consummate their transactions, the availability of locally present, regionally present asset managers that can effectively take care of your property while you're sitting thousands of miles away from it, the ability for repatriation of capital from a dividend standpoint or from a resale standpoint, despite in some of the more mature markets, some of the taxation challenges that we're seeing and the change of laws happening almost every year, or depending on the direction of political administrations here and there. That's always going to be a challenge. Um, and the availability of the right legal advice on the ground to assist on this, super important and critical, and the mindset of owners of actually willing to transact, basically. That is also key. So it's multiple facets that really have to go hand in hand together. The barriers of entry of doing that is difficult at the beginning. It's not easy, but once it happens a few times, you start seeing many investors trying to duplicate that model. And then they start applying best practices in their acquisition tactics and their disposal techniques. And then we start seeing more and more liquidity. So one of the issues we will always face is in many markets, we see a lot of dry powder, but not enough product to connect that capital. So what's really missing? Is it a valuation issue? Is it a legal issue? Is it a title deed ownership issue? Right? But Middle Eastern investors um, at the beginning were mostly driven by obviously a lot of the sovereign fund activities, and that started to really cascade down to private family offices. And lately, it was a lot of them are aggregators, syndicators working with retail investors to enter that space. Hospitality has been doing phenomenally well, relatively speaking, compared to so many of the other sectors over the last few years. And now with high inflation, high inflation indicators that we're seeing globally, tourism and hospitality is still a phenomenal way to hedge all of this.
Wonderful. This is super exciting and absolutely love talking to you. Lots of nuggets of information here, and I'm sure it would be super useful
Thank
for
you.
our audience. Thank you so
No,
much. Really
thank
appreciate
you,
spending
Daria.
time with us.
Same here. Same here. Thank you so much, and looking forward to seeing you in Cairo in November. Then.